Have you noticed what just happened to silver after Donald Trump's latest move? Almost nobody is talking about it the right way. While headlines focused on politics and trade, another story quietly began unfolding inside the precious metals market. And now one of the biggest names in global banking, Jamie Dimon, has delivered a warning that investors cannot afford to ignore. Is this the beginning of the biggest silver breakout in years, or is a major shock waiting just around the corner? Stay with me, because what we are about to uncover could completely change the way you look at silver. Welcome back to Silver and Gold Watch, where we break down the biggest stories shaping the future of precious metals using facts, market analysis, and real economic trends. If you care about protecting your wealth and staying ahead of the market, make sure you watch until the very end, because this story connects politics, banking, inflation, and global demand in a way that very few people have noticed. The precious metals market has entered one of the most fascinating periods in recent history. Gold has continued to attract attention from central banks, while silver has quietly built momentum beneath the surface. Investors who normally focus only on stock indexes are beginning to shift their attention toward hard assets. That shift has become even more important after the latest political developments involving Donald Trump. Whenever major political figures announce significant policy changes, financial markets immediately begin pricing future expectations. Investors are not reacting only to today's news. They are trying to predict tomorrow's economy. That is exactly what appears to be happening now. Trump's latest move has reignited discussions about tariffs, domestic manufacturing, energy independence, and supply chain restructuring. These topics may sound political on the surface, but they have enormous implications for industrial metals, especially silver. Silver occupies a unique position, unlike almost any other asset in the world. It is both a precious metal and an industrial metal. That means it benefits from economic uncertainty while also benefiting from industrial growth. Few assets enjoy this dual advantage. When governments encourage domestic manufacturing, more factories require electrical systems, solar equipment, electronics, medical technology, defense products, and advanced communication systems. Silver plays an essential role in nearly every one of those industries. Every smartphone contains silver. Every electric vehicle depends on silver. Every solar panel requires silver. Military electronics use silver because of its unmatched electrical conductivity. Artificial intelligence data centers require advanced electrical infrastructure where silver remains critical. As governments race to secure future industries, silver demand continues expanding from multiple directions at the same time. Now imagine what happens if manufacturing begins returning to North America while green energy investment continues growing worldwide. Demand increases while mine production struggles to keep pace. This is exactly why many analysts have started paying closer attention to silver instead of treating it as gold's smaller cousin. But there is another piece of this puzzle that deserves even more attention. Jamie Dimon. The CEO of JP Chase has repeatedly warned investors that the world economy faces unusual risks. While his comments often focus on debt inflation, geopolitical uncertainty, and government spending, experienced investors understand something important. Jamie Dimon rarely speaks dramatically without reason. When one of the largest banking executives in the world warns about uncertainty, professional investors pay attention. His recent comments highlighted persistent inflation concerns, growing government debt, global instability, and elevated geopolitical tensions. All of these factors historically support safe haven demand. Gold usually receives the first wave of defensive buying. Silver often follows later with even stronger percentage moves. That relationship has repeated itself throughout financial history. Whenever uncertainty rises, investors first seek safety through gold. As confidence grows that precious metals are entering a larger bull market, silver frequently accelerates faster because its market is much smaller. Smaller markets require less capital to move prices significantly. This creates explosive upside potential whenever institutional money begins flowing into silver. Recent market activity suggests that possibility may already be developing. Exchange-traded funds have experienced renewed interest. Physical coin dealers continue reporting healthy demand. Industrial buyers remain active despite slowing global growth. Central banks continue purchasing record amounts of gold, while private investors increasingly diversify into silver. These trends rarely happen by accident. Markets constantly reflect expectations about future economic conditions. The Federal Reserve also remains one of the biggest drivers behind silver prices. Interest rate expectations influence the U.S. dollar. The U.S. dollar influences precious metals. Lower rate expectations generally weaken the dollar. A weaker dollar often supports higher precious metal prices because metals become cheaper for international buyers. Meanwhile, inflation continues creating uncertainty. Although headline inflation has cooled from previous peaks, many essential living costs remain elevated. Housing, insurance, healthcare, food, energy. Consumers continue feeling financial pressure even when official inflation numbers improve. This creates an environment where investors seek assets capable of preserving purchasing power. Silver has historically served that role during long periods of monetary uncertainty. Unlike paper currency, silver cannot be printed by governments. Its supply depends on mining production. Mining production cannot suddenly double overnight. Opening a new silver mine often requires many years of permitting, financing, environmental reviews, construction, and infrastructure development. Meanwhile, demand keeps growing almost every year. That imbalance becomes increasingly important. One statistic surprises many investors. Most silver production actually comes as a byproduct of mining other metals such as copper, zinc, and lead. This means silver supply does not simply increase because silver prices rise. Mining companies primarily respond to copper economics rather than silver economics. That creates structural supply limitations. If industrial demand suddenly accelerates, mining output cannot instantly respond. Markets eventually notice shortages. Prices adjust accordingly. History has shown this pattern repeatedly. During previous commodity cycles, silver experienced powerful rallies after long periods of underperformance. Patient investors who recognized changing fundamentals often benefited the most. Today, several familiar ingredients appear to be returning at the same time. Political uncertainty, persistent inflation, large government deficits, industrial expansion, growing energy investment, central bank buying, renewed investor interest. These factors collectively create one of the strongest long-term environments silver has seen in years. Yet mainstream attention still remains surprisingly limited. Most financial headlines continue focusing almost entirely on stock indexes, technology companies, and artificial intelligence. Meanwhile, precious metals quietly continue building strength beneath the surface. Professional investors often understand one simple truth. The biggest opportunities usually develop before they dominate the headlines. That may explain why institutional positioning has started changing while retail investors remain largely distracted. The next question becomes even more important. What exactly could happen if these trends continue accelerating over the coming months? Because this is where the story becomes even more interesting. The silver market has seen moments like this before, but each time the story has been different. What makes this situation unique is that several powerful forces are moving together at the same time. Investors are watching political headlines. Central banks are adjusting their reserves. Industrial demand continues to grow. Financial institutions are preparing for uncertainty. All of these pieces are creating a market environment that many analysts have not seen in years. One of the biggest questions today is whether silver is finally breaking away from its traditional relationship with other financial assets. In the past, silver often followed gold. It also reacted to movements in the U.S. dollar and Treasury yields. While those relationships still matter, there are now additional forces pushing silver in new directions. Manufacturers continue expanding production of electric vehicles. Solar energy installations are reaching record levels across multiple countries. Advanced electronics require increasing amounts of silver because of its unmatched conductivity. Every new technological breakthrough creates another layer of demand that did not exist just a decade ago. That means the silver market is no longer driven only by investors buying coins and bars. Industrial buyers have become just as important. Large companies cannot simply stop production because silver prices increase. They need the metal regardless of market conditions. That creates steady demand even during periods of economic uncertainty. Now add another factor to this equation. Supply growth has struggled to keep pace. Many major silver mines have experienced declining ore grades. New mining projects require years of planning, permits, financing, and construction. Even when companies decide to expand production, they cannot bring new supply to market overnight. This growing imbalance between supply and demand has become one of the strongest long-term arguments for silver bulls. Then came another layer of uncertainty through political developments. President Trump's latest policy announcements have increased discussion about tariffs, manufacturing incentives, and domestic production. Whether every proposal becomes law is almost secondary. Markets often react to expectations long before policies take full effect. If investors believe future trade conditions may become more difficult, businesses begin adjusting immediately. They secure inventories earlier. They diversify suppliers. They increase holdings of strategic materials. Silver fits directly into that category. Companies involved in electronics, renewable energy, defense systems, and advanced manufacturing understand that supply disruptions can become extremely expensive. Holding additional silver inventory becomes a form of protection against future uncertainty. Financial markets recognize these behavioral changes very quickly. That helps explain why silver sometimes rises even before official economic data confirms stronger industrial demand. At the same time, many investors continue watching the Federal Reserve. Interest rate expectations remain one of the biggest drivers of precious metals. If markets expect lower rates, silver often receives additional support because lower yields reduce the opportunity cost of holding precious metals. If inflation remains persistent, while growth slows, investors become even more interested in hard assets that historically preserve purchasing power. This combination creates a complicated but potentially favorable environment for silver. Jamie Dimon recently reminded investors that markets should not become too comfortable with current conditions. His broader message focused on remaining prepared for uncertainty rather than assuming stability will continue indefinitely. History shows financial markets rarely move in straight lines. Unexpected geopolitical developments, banking stress, government debt concerns, and inflation surprises can all change investor behavior almost overnight. When confidence begins shifting, capital often searches for assets viewed as stores of value. Gold usually receives the first wave of attention. Silver often follows with even greater volatility. That is exactly why experienced investors watch silver so closely. The market is much smaller than gold. Because it is smaller, relatively modest investment flows can create much larger percentage price movements. This creates both opportunity and risk. Volatility works in both directions. Sharp rallies are possible, but so are rapid corrections. Successful investors understand that emotional decisions usually produce poor results. Instead, they focus on long-term trends rather than daily headlines. Another important development involves central banks around the world. Although central banks primarily purchase gold, their actions send a broader message about confidence in traditional reserve assets. Record levels of gold buying suggest many governments want greater protection against financial uncertainty. Private investors often respond by increasing exposure to both gold and silver. This psychological connection should not be underestimated. Confidence influences markets just as much as economic data. When enough investors believe conditions are changing, market momentum can accelerate very quickly. Meanwhile, physical silver demand continues showing strength across many regions. Coin dealers have reported strong customer interest during periods of uncertainty. Online bullion platforms continue attracting first-time buyers looking for portfolio diversification. Institutional investors are also paying closer attention. Exchange-traded products backed by physical precious metals often experience inflows when market risks increase. Each of these developments may appear small individually. Together, they create a much larger picture. That picture suggests silver is becoming increasingly important within the global financial system. The coming months may reveal whether current trends develop into a sustained long-term bull market or simply another temporary rally. Either way, investors across the world are watching every headline, every economic report, and every major political decision more closely than ever before. The biggest mistake investors can make right now is assuming that nothing has changed. Markets rarely send invitations before major moves begin. They usually provide small signals that only become obvious after prices have already moved. That is why experienced investors spend more time watching trends than reacting to headlines. Silver is now sitting at the intersection of politics, industry, technology, and global finance. Each of those areas has its own powerful story. Together, they create one of the most interesting environments silver has faced in many years. If industrial demand continues rising while mine production struggles to keep pace, the supply picture becomes tighter. If inflation remains stubborn, investors may continue looking toward precious metals. If interest rates begin moving lower, silver could receive another wave of buying interest. If geopolitical tensions remain elevated, safe haven demand may increase again. And if governments continue reshaping trade relationships, businesses may increase strategic stockpiles of critical materials, including silver. None of these developments guarantees that prices will move straight up. Markets never work that way. There will always be pullbacks. There will always be profit-taking. There will always be moments when fear temporarily replaces optimism. But long-term investors understand that volatility is simply part of every major investment cycle. The real question is whether the fundamental story is improving. Right now, many analysts believe the answer is yes. Another reason silver deserves attention is its historical behavior during major financial transitions. When confidence in traditional assets begins changing, silver has often experienced periods of exceptional performance. That does not mean history will repeat exactly, but history frequently offers valuable lessons. The world economy is entering another period of transformation. Artificial intelligence continues expanding. Energy infrastructure is changing. Electric transportation keeps growing. Global supply chains are being redesigned. Governments are investing heavily in domestic manufacturing. Every one of those trends increases the importance of strategic industrial metals. Silver stands near the top of that list. That is why many professional investors are no longer asking whether silver matters. They are asking how much exposure they should have before the next major move begins. Jamie Dimon's warning should also encourage investors to think carefully about risk. Successful investing is not about predicting every headline. It is about preparing for multiple possible outcomes. Diversification remains one of the strongest tools any investor can use. For many portfolios, precious metals continue serving that role. Whether silver reaches new highs next month or next year, nobody can know with certainty. But what we do know is that the global environment surrounding silver looks very different than it did only a few years ago. Demand is changing. Supply remains constrained. Politics continue influencing global trade. Central banks are reshaping reserve strategies. Financial markets remain sensitive to inflation, interest rates, and economic uncertainty. When these forces begin moving together, markets often experience significant changes. That is exactly why today's developments deserve serious attention. The unthinkable may not be a single headline. It may be the realization that the silver market has quietly entered a completely new phase, while most investors were focused somewhere else. Those who stay informed may recognize opportunities earlier. Those who ignore these signals may find themselves reacting after the biggest moves have already happened. As always, remember that every investment decision should be based on careful research, your own financial goals, and proper risk management. No market moves in a straight line, and no prediction is guaranteed. But understanding the forces driving today's silver market gives every investor a stronger foundation for making smarter decisions. The next few weeks could become some of the most important for precious metals this year. Every Federal Reserve statement, every inflation report, every major trade announcement, every geopolitical development, and every update from large financial institutions could influence where silver moves next. That is exactly why millions of investors around the world will be watching very closely. If you found this analysis valuable, make sure you hit the like button, subscribe to Silver and Gold Watch, and turn on notifications so you never miss the biggest updates shaping the future of gold and silver. Share your opinion in the comments below. Do you believe silver is preparing for its next major breakout, or do you think more volatility is still ahead? Thank you for watching, and I will see you in the next video.